All right, well, good morning, active traders, and welcome to our Trading Week Ahead broadcast for today, Saturday, May the 14th. After Friday the 13th yesterday, today's the Saturday the 14th. Coming at you live here from Colorado. Markets have been in a really strong decline. Look how strong that sell-off has been from the 4650 all the way down to under 4,000. So we lost a key support level there. Despite the recent bounce, we may well be in for stormy weather ahead. Now, typically a bear market rally may last for as many as 3 days. So we may see Monday and maybe even Tuesday go up, but I'm not going to be suckered in by that. I expect the market will continue down and end the week, at least by Thursday or Friday, heavily in the red. So we want to not be faked out by a bear market bounce. Wendy's telling me full moon is Sunday, so we can go down again. That could be. Hey, Devender, we'll take a look. And yeah, I agree. Hey, Mira. Good to see you, Mira. Yeah, it is a relief rally, so we'll see where things go. Of importance, of course, is our VIX, and if we take a quick peek at that, you can see it's in decline, but we have a shooting star here, but we're still way up in bear territory over the 22, right? That was our key resistance area back then. It broke out. We're all the way up here in a pullback. We may well see a choppy week next week. I don't expect any huge rally or huge sell-off. It's going to be a whipsaw week. That's my forecast. Whipsaw up and down week. Given this VIX profile overlaid or in conjunction with the S&P, we're very likely to see a seesaw up and down. So what that means to you as a trader and to me as a trader is I don't want to get faked out by something that goes up and you get in long and all of a sudden goes back down. So we'll see where it's going. But yeah, so I expect kind of a whipsaw in the market next week. Wow, big turnout this morning. Good to see so many of you here. Another epic turnout. So let's see what's in play. Now, if you are looking for bounces, and there are, like one of the few smart commentators on Financial News said, there is probably some time and place to go cherry picking here and there. I went long a little bit of ARK. I've been long SARK forever. But I think ARK may be due for a bounce. That's the technology fund that people have talked about. I've been long SARK on its way up, and now I'm getting back out, and ARK may be due for a bounce. So that's one to keep an eye on there. And other ones that have been sold down sharply. We have Shopify, PayPal, Netflix. Now these may be dead cat bounces, granted, but I think there's a area for planting a few seeds, and by that I mean I go long just a few $100, maybe up to $500 worth, like 5 shares or something, small itty bitty trades in case they do bounce. And then if they do start to go up, we can scale up and martingale in, so we build a position of at least a few hundred shares. But anyway, we've seen such strong drop in many of these instruments, it makes sense to look for pivots as well. If we take a look at energy, and also I went long pot stocks a little bit, like Canopy Growth and Tilray and whatnot, because they're finally starting to show a little sign of strength. So I'm still 80% of my capital, 82% is short bias with UVXY and SQs. So I'm still this much short bias, but a little tiny bit, 20% long bias. Let me ask a quick question. How many of you are starting to think about, if not yet doing, but at least think about maybe picking up some of the instruments that have good earnings and all that kind of stuff that is sold off and are starting to bounce a little? Like Disney might be another good candidate, right? I think it's too early to put on size, so I'm not putting on any size except speculative teeny tiny size, but I am starting to put on a little bit. For example, Disney looks wonderful. Disney is a buy here. Who can tell me why Disney, and I just saw this thanks to my colleague Steve Nissen for teaching me, what's the buy signal in Disney? There is a buy signal in Disney. What is it? Hey, Wendy. Hey, Mira. Right, Mira's very smart. She says, good candidates in the stocks with good fundamentals, leaders with dividends. Right, Rob. Right, Bob Hammer. Hey, Freddie. Engulfing. Not quite engulfing. Right, Damon. Right, I mean, right, Ari. Right. It's hammer time. Ba-ba-ba-dum. So we've got a hammer. So I'm going to start buying. I would have bought Disney yesterday if I had seen this. I really would have, but I didn't see it till I just pulled it up on a whim here. But that's a buy signal. So when you have quality instruments that have come from 158 down to 100, that's a 30% haircut or whatever. We've got a hammer, so that's flashing a buy signal. You can see one thing to look at, and this is, as you well know, when you look for pivots, you look, like Mira just said, with high volume. You look for high volume green days in conjunction with the hammer. And again, for more on candlesticks, learn exclusively from my colleague Steve Nissen at candlecharts.com. He's brilliant. I've made a lot of money with many of my winning trades, but thanks to what I've learned from Steve Nissen. So thank you, Steve, and thanks to all of you for paying attention. So anyway, we've got a hammer in Disney. So I'm going to start buying it come Monday in case we get a move up to. Now, riddle me this. Where would be your exit target on a Disney bounce? Hint, it's not going to be 150. Where would be your personal exit target or range? There's no right or wrong answers that we don't know, right? We can't predict. But targets come in helpful in deciding your position size and how to scale. So I'm 160, 160, 114, 112, 116, 107. We're at 107. Let's see, 119, 112. Well, you guys are more skeptical than I am. I would not trade a $100 instrument if my target were only 112. I would not be spending $100 a share in something that only has 4 points of upside. Now, it's not a full mean reversion, which would be 50% of that range, which would be roughly 130 or so. My exit target would be right about there, 120. So the high teens, 120. I don't expect it to go all the way up to 130, but that makes sense too. Remember your risk reward. You don't want to buy a $108 stock if your exit target's only $4 up. That's too much capital to swing for too little return. On that chart, my exit target would be 120, maybe 124, roughly a third, a 30% retracement, not a full 50% mean reversion, but roughly a third of a bounce. So Disney, remember I said this next week, it'll be back up here. You guys will say, oh yeah, it was right, amazing. Like Steve Nissen says, you have to be a market detective, right? Be a market detective, look for clues. Look for Western technicals like big volume. Look for Eastern candlestick patterns like a hammer and see if it's going to work out. Now, if you do buy in here, your stop loss using a hammer as the criteria would have to be way down at just under 100. So you'd have to be willing to suffer 8 points of drawdown. So if I'm going to suffer 8 points of drawdown, I got to have at least 16 points of upside, which yields 24 or so. So that's why the target up here. All right, what else do we have? Let's take a look at some other charts. That just came to mind. Let's take a look at oil. We can look at our favorite Oxy Pete, still looking good. If Warren Buffett likes it, so do I. Occidental Petroleum looks great. Definitely not a trade recommendation, but I'll look to go long over the 66. Halliburton, not so good. ConocoPhillips, choppy as heck. Exxon, choppy and up, and Chevron looks fine. So some good charts. Now we are starting to see some initial pivots in our pot stocks, which is why I bought some yesterday, just a little bit, because we know it's been a very long sustained downtrend, but these instruments may well come back to life finally because of the volume and the pivot pattern. There we have a bullish engulfing down at the low near the 4, right? So we have a BE down here. And so that's a long signal. We have kind of a dragonfly doji, I guess, or gravestone doji, I don't know. Well, anyway, the point is I wouldn't go long until it breaks the upper tail at 480 or maybe 5, but this may well be a good runner. Tilray. And I like this one a lot because it had a recent high of just near 9. So risk reward, we've got lots of upside on that chart. Of course, the favorite thing that I trade all the time is UVXY. It's had some really nice upside move from my live room members. I called it, for all of you who are members, remember I called it 1170 was the start, right? And I said, you won't regret it along anywhere in the 11 to 12. That's cheap. And I said to sell, or I said, at least I was selling up near 17. Now it's kind of hacking around. We got a shooting star establishing resistance at the 20. So we don't want to go in long size in this till it breaks 20. But definitely I put on a little bit of size, 5 maybe. I think it's just about 370 shares, something like that, back on Friday. So I put on little size in case we get an upside move in this. Again, this goes up when the market goes down. Even stronger is our NASDAQ inverse, the short Qs. And you can see that one has Outstanding upside. Now that's a really good chart. We've been trading it since the low 30s, and now it's up, peaked at 60. So it almost doubled, right, from 32 to 60. This is the short Qs, SQQQ. Hey, Tony. Let's see. Trader asking about TCHP. I don't really have time for trade. Unfortunately, with so many of you here, I don't have time to put in trader tickers. It might be okay for a bounce. I would wait. As a rule of thumb, I like to wait till something reestablishes a long trigger above the nearest whole number. So personally, I'd be looking to wait till it gets over, say, 24, say 24.20. I like ARC better because it's got a big range. Netflix got really hammered, right, from way back earlier in the 700s down here to 180. Healthcare holding steady. Retailers not doing so good with Walmart and Costco pulling back sharply. And again, with our S&P doing a nosedive and doing a little bounce here, it'll probably do a head fake. It will very likely go up farther than you expect, just enough to get you in, and then dash your hopes and crash back down. Such is the nature of the market, right? So it'll probably be haphazard, slightly up on Monday, then maybe a strong Tuesday, and that'll sucker everybody in. Then Wednesday, it'll do an open range move up to around 10 o'clock, and then all heck breaks loose and it sells off sharply and everybody gets caught by surprise. So as a trader, don't be caught by surprise. Use very clear support and resistance levels that are not the same as everyone else uses. Use things that are based on volatility and ranges and price elasticity. If we take a look at our intraday charts, I think Veru was a really good one. That was our biggest runner yesterday, and that's one that one of our smart traders, Ari, had mentioned. And thanks for that. VERU, look at that. Very nice, Veru is, right? Went all the way from 10 to 15, then pulled back. This is a 2-day chart, and it's a very common pattern we saw yesterday. You get a nice sharp move up till maybe 10 or at the latest 11, and then it rolls back down to either the midpoint or all the way back down to support. So do remember, trading the open is much smarter than trading the middle of the day because that's where the moves are up. Hey, Alan. Hey, Bill. Hey, Tony. Let's see. A couple of you asked about Twitter. Twitter did a huge gap down yesterday, and one of my smart traders, I think it was Devinder, had mentioned this one when it was around 40, and it did run up a little bit to 42, but I don't see a good entry on this chart because it had a lot of weakness. People bought that up. The shorts got squeezed and covered, but it just did a range-bound move. So unless it gets out to new 2-day highs or lows, I'm going to leave that alone. I prefer charts like this, like RBLX. This is one of my traders, Mick, had mentioned on Thursday, and it did a really nice run for us from 24 to 30. These are the type of charts that you'll learn about as a member of the live room. Charts that have really good directional volatility and good relative strength compared to the rest of what's out there, to the best of our ability, right? We do cover stocks like this that are $5, $6, $7, as well as the ones that I have grown up loving, ones that are in the $15, $20, $30 share range. So we generally don't cover expensive stocks over $50, and we don't cover the junk under $1 or $2. So we do definitely cover the most actives in the $5-ish share range that are the daily movers like NU and these others. One thing that you'll find is always a challenge as an active trader is to get charts that are relatively consistent. You'll find it difficult to find charts that are consistent unless you have help. And so that's what my live room is for. At my trademastery.com/live, you can join my live room. And it's only $7 to try for a couple weeks. So let's see, some questions about some tickers. Let's see. So I'm asking about Marathon. Wow, Marathon's only 12. Amazing. You know, with the big crash in crypto, Marathon and Blockchain Riot, those are the two that we cover for, and Coinbase. The main one we cover is Marathon, MARA, for a crypto type play. We also cover Riot, RIOT, and Coin, COIN. Those are the three stocks that track crypto. And after the big crash, we're starting to see a bounce. So yeah, Marathon looks good. I like that one. How about Bank America? Financials are probably going to do well. I was speaking with someone last night on that. Not for intraday, but maybe for swing trades, because the rise in interest rates, and that's likely to continue in our current markets. The banking and financial sector is likely to do good. The sectors that I think would be good are defensive stocks, things like, let's say, healthcare, finance, technology's out, so I would not be doing any trades in over high multiple, high PE tech stocks, or things that have trading at gajillion times earnings or whatever, or 15 times earnings. We want to trade instead things that have good momentum and volatility and good relative strength. Take a look at a couple of pot stocks here. I bought this yesterday right there, so I didn't decide to consider trading pot stocks till afternoon, and so I bought a little. I left Agri. I think I left Agri alone. I bought ACB, Aurora Cannabis. I bought Canopy Growth, and I bought some Tilray. But the cannabis sector may light up, so do keep an eye on these. ACB, CGC, and TLRY, Aurora Cannabis, Canopy Growth, and Tilray are my three favorites. So they may be good for swing trade. The reason I mention these is because a lot of these have come down far. Just like things like Netflix, right? Netflix and PayPal have been crushed. Now, I think they overdid it. I could be wrong. I mean, it's always a hazardous, risky endeavor to try and bottom fish and hope that you got somewhere near the base. With that angle of descent and lack of green on the uptick, I'm going to hold off for now, because it looks cheap now. It'll look even cheaper when it's down at 30 or 40 if it keeps going down, right? So I'm not going to bottom fish on size now, but I'm going to start throwing some darts at charts like Disney when they do start to have things like reversal signals like hammers. Yeah, there's a lot of good charts out there. Thanks for asking. Let's see. Someone's asking about Boeing. No, that's a horrible chart. The reason isn't so much the decline. Who can tell me the reason why buying this anywhere in this region would be a terrible idea? It has nothing to do with the fact that it's going down, by the way. It has nothing. Professional trading is all about a word that starts with the letter R. Who can tell me? Why would this be a terrible chart to buy regardless of the trend, even if this were just sideways or even going up? Right, Ari got it. Range. Good job. Smart trader in the house. Yay. The range is crap. Your risk reward. That's something that I learned so much from Steve Nissen. He talks about risk and reward. The reward is not that much I don't want to be buying a $130 stock with the upside of just maybe $10 or $15, $20. The range is terrible on Boeing. So for that reason, it's fired. Look at it like an eye test. Compare, say, Boeing. So 250 to 130. So almost got cut in half. Compare that to Disney from 180 down to 100. It's got a much bigger point range. Or charts like ARK. I bought a little bit of ARK yesterday. Who can tell me why I bought some ARK? Or day before yesterday. I think it was Thursday I bought, and I bought it again yesterday. Something like that. I bought it within the last couple of days. Look at the range. This thing went from 120 down to 40, and it's got large green volume, and it's got spectacular range to work with. Just like, again, these are very risky. These are not risk-free. These are extremely risky speculative entries. But look at Netflix. That's a tremendous range. I pronounce Netflix oversold at 180. I think it'll get back maybe to 260, 280 easy. I don't know if it'll get to 400 this summer, but I would be shocked if Netflix doesn't get back to 260 by June or July. Okay, so Netflix, it was doing so well until 700 hit, and then 700 was a hard ceiling, and 160, really? That's a little overdone. Maybe 340 I can see, but 160, 180 down here. So now's a good place. I'm going to start buying a little Netflix. I like Netflix. I like Disney. I think PayPal's oversold. It's so 300 down to 80. Range. Think about range. Profit is all about getting a piece of range on things that move. Shopify's a little pricey, but again, 1,700 to 400, a big range. So those are a few of the candidates. And personally, I like Disney the best because it's a brand that everybody likes, and institutions love owning Disney and Amazon and Apple. And let's take a look at Apple. Speaking of, I do not like Apple up here. I think it's still overpriced up here. Apple would be absolutely terrible to buy here. And it may bounce up to 150 or 160 at most, but risk reward, the percentages of the delta, the beta, the volatility, the volatility, it's not good enough in this. The numbers don't make sense on that chart. 180 to 120, and it's currently what, 147? The range is not good. It may be okay for a $2 or $3 bounce, but I don't want to be buying $150 share stock. Maybe $5 or $6, but that's, the numbers are skewed. The numbers are not favorable. I want numbers that are extreme. So I'd rather buy this at 105 and sell at 140. I'd rather buy this at, say, 45 and sell at 70. I'd rather buy this at 180 and sell at 280. Very, very like. Now, of course, the market may crash and these may keep going down, but this is a time to selectively, judiciously, at least what I do is extremely small size. Again, under $1,000 per position. So I might buy 5 shares of this. Now you may laugh, well, why even bother with 5 shares? Well, who's laughing now when I'm in 200 shares and it's up several $1,000s? You start off with, say, 5 shares, then double down to 10, then 20, then 40, then 80. Martingale in to especially speculative entries, because frequently they'll crap out, right? If I buy 180 and I stop out at, say, 170 or 160, if it's only 5, 10, 20 shares, that's not an expensive mistake. And if it starts to run, I've got a good foothold, and I can then double into the position, climb up, and martingale. So I want you guys to think, especially on recovery plays, with these things that have been way sold down on any sign of bounce, to use a martingaling. Now, you don't have to use a doubling. You can use progressive or sequential. You can buy 100, then another 100, then 200, then 300, then 400. You don't have to do 100, 200, 4, 8, 16 or anything. But do have a progressive position sizing strategy designed to capitalize on swing pivots. And when you're doing intraday trades, I was doing really good yesterday. I like to pair trade. I trade Soxol frequently. I was trading this one a lot yesterday, SOXL. This is a really good example of my favorite long bias ETF to trade. The semiconductor long leveraged SOXL. When it goes up, things like UVXY and SQs go down. So I trade them against each other. As one goes up, I leg into it, I scale into it. And in the first sign of trouble, I tighten up the trailing stop, let the market take it out to profit, pa-ching. Then I flip my energy over to, say, an SQ instrument. Play the bounce. UVXY and play the pivot. And I made money on that leg up too. So anyway, you're looking at, for intraday trades, you want charts, mostly ones that have multi-point runs up to new highs. Like the one we covered for our members yesterday, Veru. So anyway, with that, I wanted to thank you all so much for being here. I'm going to wrap up. Let's see. No, I don't cover options. Let's see. Semiconductors. I don't know. I don't think the semis are buy just yet. I like SOXL a lot better than the individual chip makers. One thing that you want to do is start, or at least what I have found that I prefer doing, is I end up trading more. I trade a lot more volume on ETFs and ETNs than I do individual stocks. So I'd much rather trade, say SOXL compared to, say, AMD Now, AMD looks great though. That's a wonderful chart. That was actually pretty good for day trading too. So thanks. So we'll cover that in the room. Let's see how NVIDIA is doing. Another great chart, but the range isn't good enough at 170 a share. That's not enough juice, but AMD looks okay. But then Soxel has a better percentage. So one thing that you may want to consider doing as you develop a trading plan for the upcoming weeks and the month ahead or so is look at both ETFs and individual stocks. You can be individual stock picker, but oftentimes the ETF can be lower risk, especially if you're swing trading, because they don't gap down or up as much as individual stocks have been known to do. So good stuff. Hey, thanks, Jim. Appreciate it. Right, Alan. Yeah, it might be more anti-reverse martingale, right? But the point is, start small and then snowball, or start a sequence of small trades, like planting seeds. That's how I look at my swing trade positions. Frequently, a lot of them stop out. That's fine. The trick is it doesn't cost me much, so it reduces fear of trading. Or I did over $41 million worth of real money trades last year, so with tax return proof on the front of my TradeMastery.com site for my Fidelity account. So I'm definitely not afraid of trading. But if you do have issues pulling the trigger on a trade, it's just simply because you're trading too much size. It can be incredibly liberating to do a lot of 10, 20, 30, 40 odd lot share trades. You're not going to make a fortune, but hopefully you won't lose a lot either. So start small and then gradually enter on over time. Particularly important for right now when swing trading. Day trading, I do as much as 16 to 1900 shares at a swoop in my trades. I start off by 300-400 shares at a time. I leg into it. By the time it's run up, I may be up almost 2,000 shares. And the first time we roll over, I sell it all. And goal is to make as much money as I can. So I hope I can facilitate that for you folks as well. So we'll look at everything coming up in the live room. Thanks for being here. I'm going to wrap up for now. I do have a wonderful weekend, and we're past Friday the 13th here on Saturday the 14th, and we're looking for really good volatility coming up. So join my live room. It's at www.trademastery.com/live. And I'll see you on Monday. So y'all take care, and I'll see you next time. Bye for now. Stay safe.